We are proceeding into the current panel discussion talking about redefining consumer credit, the next chapter for digital lenders in India. Before we proceed, ladies and gentlemen, we have some walk-ins joining us. We request you to take the seats in the front, please. The ones seated behind, we would appreciate and encourage all of you if you step forward and take your seats ahead. All right, without any further ado, ladies and gentlemen, let's welcome Mr. Saurabh Chandra, National Leader and Partner, FS Consulting, Domestic EY, who would be moderating the session. A warm welcome to you, sir. In the panelists, please put your hands together and welcome them, Mr. Anil Pinapala, Founder and CEO, Vivifi, Mr. Ranvir Singh, Founder and CEO, Kissht, Mr. Nilesh Patel, Founder and CEO, LeadSquared, and Mr. Gaurav Chopra, Founder, IndiaLends. A warm welcome to all our speakers, panelists, and we request our moderator, Mr. Saurabh Chandra, to lead the conversation.
Thank you so much. First of all, thank you so much for taking time out. I know that it's not easy, especially afternoons. And when so much of economic activity in the country is happening, you taking your prestigious time out for all of us. I have 4 very distinguished individuals out here. They certainly are the GDP contributor. They not only helping in the economic growth of the country, but also the financial inclusion. As you know, digital lending is not just for the tier 1s and tier 2s. Unless tier 3, tier 4, and the further penetration of financial inclusion is not in the country, we will never grow. So for that, thank you so much for helping our country grow, helping individuals grow, and making all of us being better self of ours. I am gonna put some questions which is generally in all our mind. We all think in our offices, setups, friend zones, or even when we are raising funds. And I think our friends are fully geared up to give a very unfiltered answer. Meanwhile, till the time this is going on, you also can put your questions at the bay. After 30 minutes, we are going to open it up for the audience. And then we will try to see that how much can we answer what you have in mind. Yeah? We good? Should we kick it off? Superb. So let me start with Ranvir. Ranvir, one very important thing, and today when I meet the next gen of entrepreneurs, they talk about that there are XYZ problems to be solved. But I'm not sure that do they even know that what problem you guys solved when you started few years back and how challenging it was. So if you have to give a color that what has changed in the last 5 to 7 years, and what those 2 or 3 very interesting opportunities that you see that we can tell our fellow friends and entrepreneurs to solve for the country and growth.
Sure, Saurabh. First of all, thank you for having me here. And thank you for this very generous introduction. I was half hoping that you will not start the questions from me, but thanks for starting with me. The other thing I should say that of all the introductions one have got, one has never been told GDP contributor, but thank you for that. But no, coming on to the more serious things, I mean, I'll be making a cliche. If I say that the journey over the last 4 or 5 years in digital lending has been extremely transformative, not only for we as a company in particular, but I think economy in general. And let me just lay out a few crumbs of themes which has happened over time, maybe 3 of them. First and foremost, I think digital lending has evolved from being a frenzied disburse setup to something where a lot of discipline has creeped in. At the outset of Fintech dawn, most of the time, digital lending was deeply rooted in trying to prove themselves. So going after the fringes of, the opportunity, opportunity which banks and NBFCs were otherwise not serving. These were unbanked customers, NTC customers, and so on and so forth. But I think it has gone through a big transformation. Today we are right at the central. Perhaps you can call it, we all have grown up to adolescence here, and it has given way to some kind of sober, enlightenment. And I think one thing which has changed dramatically is precision is valued far more than pace. During the course of this journey, of course, tools like AI, ML, which used to be used very frivolously, which were just holding a strong promise in future, today has become the central part of we doing business. Talk about any and every aspect, be it credit decisioning to anything else. I think tools like this have made a far-reaching impact. So much so, as we speak, 5 years back, perhaps the total number of customers this industry may have served was 5 to 10 million. Today we have served almost 120, 130 million. And when I say served, it is not seduced. Of course, it has also brought a lot of changes in the way customer view this business. There's this whole element of, I would say, some kind of an impatient discernment from customers. They are no longer wanting to be in the queue or wanting to sign a brickloads of document. In fact, that is not only seen as an inconvenience, but it is seen as perhaps the insult of modern sensibility. So that's one big change, which is the scale and which one has arrived. I think the second big change which has happened is there are a plethora of business models which have come in. What used to be a solitary pursuit of just driving digital lending standalone now has become a very integrated system, different business model, right from marketplaces to payment-backed lending, which what Paytm and few other companies have started and now scaled up to a different level, to purchase financing, to embedded financing in almost every aspect of it. Every personal loan app is also offering a credit card. Any merchant platform is offering a credit line for the customers, and so on and so forth. Every checkout page has, there are options galore when it comes to embedded financing. What it has led to is the boundaries have blurred between Fintech, NBFCs, banks. And what it has led to is, a business model which is far more collaborative. It is not seen as, there is no way you can create this system where only one standalone trying to build. And I think this business model evolution will continue to happen. And that's the second big change which has happened. I think third, maybe the most pronounced change is the regulatory framework which has driven growth here. I think RBI has been a guardian of honest and fair play in Indian market. They have shown an unshakable resolve when it comes to driving stability in the market. Of course, it started with DLG guidelines. The DLG and then bunch of other things which was around consent-based architecture or privacy piece or just disclosure to a different level. Let me give a very quick example of FLDG, which is the first loss default guarantee. The day it came, it brought a clarity in the market for the entire co-lending and the collaboration of capital provider versus the customer ownership to come together and start driving business to a different level altogether. So I think all those things have brought a very, very, transformative change. Particularly this change is very structural in nature. Now, I would believe even the most evangelical of startup will confess that compliance is no longer about, it's not some bureaucratic nuance. It is almost, or not even, it is throttling business, but it is a true moat, a true competitive advantage. And how it has helped customer is now customers don't see transparency as a form of entitlement, but it is almost as core as the day is long when it comes to serving customer. So those are some of the trends which I think have been the mainstay of what has happened in the last few years and added significantly to the scale and the coverage that digital lending has arrived.
Fabulous. So I think it's a very important takeaway, the ecosystem, the regulation. And since we're talking about ecosystem, Gaurav, I'll come to you. This whole ecosystem enables the financial inclusion as well. And I remember in 2021, we were at 51% of financial inclusion. Today, as a country, we are at 69% of financial inclusion. So that shows that how fast and exponentially we are actually bringing the unbanked to banked. But as this is growing, there is a topic on credit risk assessment as well. And the credit risk assessment unfortunately works on the data. Since this is so new for us as a country for that segment of society, how do you see the current challenges and any one or two advice for the fellow entrepreneurs in the country that if somebody is trying to solve for this problem, may not be to a probability of 1, but assuming going from a probability of efficacy from 0.6 to 0.8, what couple of recommendations would be from your side?
Thank you, Saurabh, and thanks again for having us here. I'll start by echoing what Ranvir just said, which is thanking the RBI first for the DLG guidelines, which have not just made the data transparent, but also put out roles and responsibility for all ecosystem players while guarding the consumer. Now, as we expand the target segment into tier 2, tier 3 cities, Ranvir mentioned moving from 20 million to 100 million, which will soon become 300 million. I think there are 3 important things in my view which still need to happen. The first is the over-reliance on the credit bureau needs to change. Or if not over-reliance, the credit reporting needs to happen real time. Now, as we all know, there's a big lag in the whole credit reporting ecosystem today. And as we expand into segments, into underbanked, into new file customers, I think a real-time reporting mechanism will help to build better models and help in better lending. Secondly, I think, especially when we talk about tier 3 cities, when we talk about entrepreneurs or non-salaried individuals, the focus on secured loans can't be underestimated. And here, I think what new age entrepreneurs can do is focus on the customer journeys. To give you an example, gold loans with rising gold prices has become a mainstream product now. We also have loan against securities, which is mutual funds, and so on. Other things will also get added. But the customer experience, customer journeys, even today are not, how a new age or a digital business would like them to be. So I think focus on improving those journeys for secured products can help get more customers under the realm of formal credit, as well as do better risk management. And lastly, I think India is a country of many, many segments. You can't just say that there are 5 segments or 10 segments. So more investments on micro segmentation, stuff that sort of you and your company do, I think would lead the way to better underwriting for more target segments. And that focus needs to be there.
Certainly. In fact, if there are designers in the room, that's the time you have arrived. Journeys are important. The CX is actually taking a center stage. And thank you for putting it on. Anil, coming to you. And though Ranvir and Gaurav can take their leaps and bounds and create business, but the money does not come fully till the time collections are integrated well. Now, the whole journey of collections in our country has undergone a massive transformation and change, right? And rightfully so, because we were evolving as a country. Today, from what you saw before and the vantage point you are at, if you have to advise top 2 or 3 things which is going to disrupt the way collections happen, what those would be?
First of all, Saurabh, as Ranvir said, thanks for that very heartwarming introduction you gave us. I will replace my therapist with you. That will be the easiest thing for me to do. Just coming back to the question you posed, and Ranvir and Gaurav have chimed on a couple of different aspects of it. Lending business, we always say that we are in the business of collections, not in disbursements, and that is the fundamental thing. The first and the most important gating criteria for any successful lending business, even from a collection standpoint, is credit risk. You need to do risk mitigation right at the time of onboarding so that you are trying to evaluate customers on their intent to repay and their ability to repay, so that you are not knowingly bringing in customers who do not have either the intent or the ability, both of which can be a problem. But moving forward, see, in India, Gaurav just touched upon micro-segmentation. Micro-segmentation is important in credit risk. But in collections, it's a segment of one, right? Each customer is his own person. They have their own realities. They have their own understanding. And in dealing with that customer who is unable to pay, when your employee is making the call, you are sending the text message, you need to be able to contextualize your communication to that customer at that point in time. And that is very difficult to do at scale. And when we all came into this business and we were all digital lenders and we said, we are not going to do collections with feet on street, that itself was kind of like a big no-no in the Indian credit community at that time. But now it's a much more accepted practice. It was a big no-no mainly because you can't have that connect. And what Gen AI or artificial intelligence, large language models, what they have done for us as a country is they have given the ability now potentially for digital lenders like us to replicate that being one-on-one, understanding that customer's problems. Because most customers don't want to default. They don't want to delay. There are life circumstances that happen that that put them in that situation. So to be able to understand that, contextualize that, and to communicate to that customer effectively so that they are able to make a payment or get a subsequent promise to pay at scale remotely is what was a challenge for the digital lenders. That challenge to a large degree can be solved with AI, mainly because we are a country of diversity, right? Like we speak, I mean, there are 25, 30 nationally recognized languages, but we speak in 500 dialects. So talk about the complexity of managing for lenders like us, where we have customers across 18,000 PIN codes, I mean, each one of us. So when you're talking about lakhs of customers, sometimes even if you have 4 Gujarati speaking people in your call center, that doesn't translate. Yeah. And you need to make sure that you are staffed optimally, you are looking at so many graphs and everything, just to make sure you are appropriately staffed. That entire challenge can be solved with these new age technologies. And I think that's a direction that we are driving in. And that's something, if anyone is building businesses here, especially from a collection side, the ability to leverage this AI as a foundational aspect of customizing those communication and contextualizing your collection messaging is the biggest thing that we all need to focus on.
Excellent. I think if in the room there are budding entrepreneurs, you have some fabulous idea on collections, it's still a hot topic. And still we all are ears that what can make it more experienced, more nuanced, less nudgy, more effective. So Anil, thank you so much for that. Nilesh, I'll come to you. You are an authority when it comes to the CRM space, the relationship management, the internet at scale. If I ask a pointed tech question, assume all 3 guys have created a business, great credit risk, great collections, but the underlying platform, and today with the talks of Gen AI, everybody wants to leverage LLMs, SLMs, or few of algorithms that we would have studied and practiced. But from your vantage point as a deep tech practitioner that you see, what will be your advice to the internet predictive tech experts who are trying to put Gen AI at the top? What's the underlying few other things that they shouldn't miss out, like data, API, metadata, models, ops, whatnot? So how do you see that you'll advise the fellow entrepreneurs who are building on top of Gen AI not to miss the underlying tech to make it more effective?
Thank you, Saurabh, for the warm introduction. I think, first of all, I'm in the company of Fintech people, so they know more tech than I can advise them, certainly. But I think fundamentally, every company is, a composition of processes and technology, interlinked with human beings to sort of achieve a certain objective. In that regard, some tech will be built in-house, some will be sourced, and in the process of doing so, you will need to make sure that all the tech you have in place to service the consumer or the customer is integrated and put in place nicely. Having said that, all businesses aspire to do 100% of that, but I'm sure, like all of, if you look at our own houses and homes, there are things which are still broken, which we want to do next Diwali or whatever, right? And it never gets done. And similarly, each business has their own challenges and problems, and they end up, trying to do everything but may not achieve, which is where what may come in hindrance to achieve some of the Gen AI objectives, because for achieving any type of ideal optimization, you will need to have all the data in place, basically. And I think that's the fundamental point. However, in credit business, I think the most important thing, which I think Anil and Ranvir both pointed out, is the credit decisioning, right? Which is the how you, to whom you basically offer, which is where I think the highest application of AI is going to be, and which is where I think both all these companies will be making large investments. And second is the collection side, which Anil talked about, I think is where you have to get the money back, right? I think these two areas will be the most important one. Sourcing is always an area of interest to any fintech or any company. They want to acquire customers, and having that in order is going to be critical, because not only for sourcing the customer the first time, but also trying to upsell, cross-sell to the same customer using, again, the data which you have, right? So I think what I'm saying is nothing new. It's basically plumbing all what you have in one system and put all the data in one place, basically.
Superb. So I think, and this I personally feel that several times we run so fast on consuming the SLMs, LLMs, that the fundamentals around the whole metadata, the models and the efficacy of the models, the auto-healing, the predictiveness, the training of the models get missed. And Nilesh, thank you for putting that focus on. Coming back to Ranvir, Ranvir, if I may ask you, so in the whole regulatory world, there's this lots of important initiatives coming in to safeguard businesses as well as consumers. I remember 2011 startup ecosystem, few companies were buzzing in, we were trying to help set up, trying to understand what startups mean. So the problems were very different. Problems were not the regulatory, compliance, security, cyber. Problems were growth, ops, sustainability, experience. But we have come long far. We are amongst the top 5 nations in the country who are disruptive in making startups work for India and to the world. Question for us is how important you see regulatory and compliance from business lenses today? And what will be your advice to any new age entrepreneurs coming into this zone? How to keep this in what degree of seriousness?
First of all, as much as my friend Nilesh, who suffer with the excesses of modesty, I should say, the good thing about having him in the panel is all the difficult questions linked to technology and AI can be fielded by him. So I'm very glad to, the way you have chosen the... yeah. No, so you realize you're asking a very, very deep-rooted question. See, I think one big transformation which has happened in the last 5-6 years is a realization that regulatory compliance is not a burden. We are moving from we are moving from a regulatory framework where it is no longer anarchy, but an architecture which is highly compliant. And it's very important to have that reflected in the business model that people are pursuing. As I mentioned, even for new age startup, it is very critical to have compliance not as an afterthought, but the core operating principle on the back of which we are building. There are examples galore where companies who have focused on ensuring compliance, and compliance not in a very lofty manner described, But being very true to customer concerns will actually make a far-reaching impact as against anything else. But I would also say that compliance to a large extent has stabilized. The realization which exists in the market and some of the moves which are very, very apparent in the market, I don't need to mention that. So for example, some of us are all members, some of us or maybe all are members of this organization called FACE, which has got a self-regulatory organization status from RBI. Those are, I would say, indicators how the ecosystem is evolving, where it is no longer RBI acting in a very patriarchal manner, trying to say what you need to do. But it is allowing you some unbounded, unfettered power to innovate, but at the same time work under a regulatory framework which perhaps the digital lenders understand better. So for the new age companies, I think 2-3 things which will become important. First of all, make compliance first. Second, I think you touched upon the opportunity on the secured business side. It's a question to ask. Why secured business, the mortgage style, the mortgage business, why one can't achieve an execution almost similar to the velocity that one has achieved in consumer loans? Part of it lies in having APIs or the digital rails which are completely compliant when it comes to assessing the property. I'm just giving one illustration to make the point, which are completely compliant, which can not only do asset verification, but also can replace those, bunch of signatures which a customer gives, but also can help, get to a precision when it comes to property valuation, when it comes to the whole act of collateral and the process of collateralization moving to a digital manner. So I would say 2 things. First is compliance, by and large, has to be first. But more importantly, compliance has to be well integrated for us to figure out what would be the new avenues of business models. And that intertwining of compliance with business model will go a long way. Here again, as much as collection is a big opportunity for new age companies, my sense is compliance is an equally big opportunity, if not bigger, for entities who can provide the right, stitching of APIs, where these APIs are not only driving prudence and compliance, but at the same time reach will go a long way as services which will be consumed by all of us and by the broader ecosystem in the market.
Very well said. I think one of the important things that across our FS world that is in talks and with highest ethos and integrity that is being discussed in the boardroom as well as in the right sovereign setups is how we make our business sustainable. And for sustainability, the compliance and the regulation posture is very important. So with that, I think the next one, and Gaurav, for you, this is very close to our heart. We, as a nation, are a very social nation. We still enjoy Shah Rukh Khan movies or maybe Dilip Kumar movies if you are having less than no hairs than mine. So we are very affable society, which means we believe in social partnerships. We believe in growing together. We believe in handshaking when we are actually walking together. Bringing that ethos to business in digital lending, how do you see partnerships to be down the line in next 3 years? Are they something one should toy around with, disrupt, leverage? Or do you see that that's not going to happen because of 100 constraints that the business has? What's your view on that?
Saurabh, absolutely. I think it's in the larger ecosystem view that you're talking about, and Ranvir also mentioned that. I think if I take a step back and I just look at the sponsors for this event, I think 40 to 50% would be the ecosystem providers, right? And if we take another step back, that how did these providers come to play, or how did they become such big companies? It is because data started flowing easily, right? Perfios, the technology partner here, came into performance because banks were willing to give out bank statements. And there are numerous other examples. And this has only paved the way for better lending. Obviously, there are a lot of concerns about consumer data safety. There are, and not just in India, globally. And if those concerns are taken care of, I think the ecosystem play, the social play, as you mentioned, is here to stay. And in my opinion, it is still, there is a long way to go over there, right? And I think without sounding cliched, better AI, better digitization, and if I may dare to say, access to, non-PII data to non-REs, who can then play around with that data, obviously keeping, consumer data safety in control, can make lending even better, can open up more avenues, and can also create a lot many, multi-billion-dollar companies.
Excellent. I think, one of the questions that a few of the fellow entrepreneurs outside the room were asking me, that what's the next disruption, for the country? When can we have next Kissht built? And I think ecosystem is the play. It's complex, it's huge, it's large. We all are hungry. We have 100 things to take care of. So if somebody can come in and say, I'm going to enable the ecosystem for you, I think we are all ears. So Gaurav, with that, Anil, I'll move on to you. And one of very important things which is coming up in the country is the various data acts, DPDP, OR, ORM. What's your advice? They are deep, they are broad, something that our country hasn't seen practiced before. What's your advice in two things? One, how do you see these regulations coming in? What does it mean for us? Why it is important for us? And second, what's your advice in making them real within the company?
Yeah, I think, see, DPDP or any other data privacy acts, I see them as enabling legislation. I'll come back to why I'll call them enabling, but in terms of 2 or 3 guiding principles that I tell my team that every lending company or any company which has digital presence in India that should always keep it their heart is, one is customer owns their data. You as a company, just because the customer chose to share some data with you, you don't own the data, customer owns the data. That's the most primary and fundamental thing that we all need to be cognizant of. And once you know that, then kisi aur ki amanat hai, to you will anyway take better care of it. So that's the first thing. Second, consent is not just a compliance obligation. It is a company's primary obligation towards their customer. If you are trying to use a customer's data, which you recognize is belonging to the customer, you will take consent for how you want to use that data. So consent cannot be like, "Arey, yahan pe Sehmati Act mein hai, you just need to put a button here so that the customer will quickly click and go." That should not be the attitude. The attitude should be to inform the customer and take the consent. So informed consent is what we all use the parlance in our language, that it is very important. So those two are very primary. The other third thing is, especially for credit and lending companies, which is very important, is most customers want their lender-borrower relations to be anonymous. You have to respect the privacy of that relationship. No one wants to really make it public unless they choose to. I mean, they can always choose to. But if the customer is expecting that, you have to offer that. And in your interactions with your customer, you also have to respect that. And sometimes it might be easy to improve your collection efficiencies and other efficiencies by trying to take some shortcuts. Don't do that, because that's not good for you as a business. Definitely not what the customer is expecting out of you. And the overall ecosystem suffers when somebody takes some shortcuts, and we have seen some effects of that. So that's why I think it is very important to take these 2 or 3 guiding principles. And the reason I called it as an enabling legislation is, see, India today has about 500 million people who are below 20 years old or 21 years old. Our median age is 28 for a country of 1.4 billion people, which makes us about 2 times the size of America, which is in a productive young population which is below 28. So we are, and what everybody who is below 28 is a digital native. So we need a foundational framework that assures that this digital native population, that every interaction of theirs is something that is being followed with where their privacy is guaranteed, where their data safeguard is guaranteed. Those guarantees should be given. There can't be like doubt. They should not have an iota of doubt. So when this digital native population, especially about 150, 200 million people who are between 12 to 20, who will all come into the workforce over the next 10 years, they are all going to be our customers. And they have to have implicit trust in the systems that they use, be it the DPI infrastructure or be it the private infrastructure companies like us will offer, that they are going to take the best care of their interests, the customer's interests at heart. And that's what these enabling legislations provide. And I think as long as we have these 2-3 guiding principles I said in the beginning, and use the laws for the intent they have been used, that they have been designed for, I think for the opportunity that India presents, this will be something that will really, from between 2025 to 2035, we will obviously be the third largest economy, but how close we get to the second largest economy will be based on how well we use this framework to get there.
Very well said. I think that's the future vision, and seems that we are on the right path. So for the folks in the room and people who are hearing the DPDP acts, etc., what this act is all about, actually it's us. And enabling it, holding it, growing it together enables business, economy, and all of us as well. So thank you so much for that, Anil. And Nilesh, coming to you, since we are in a GFF, and it will be a miss if I do not talk about Gen AI. And we are one of the most important nations in the world today who are disrupting this technology as well, though it started from a different vantage point. On Gen AI, if there are top 3 disruptions that you are seeing in next 2 years, coming in and touching all of us, what those top 3 would be?
In interest of time, I'll make it brief. I think one area which all of us have already seen, I don't know how many people would have already received a voice bot call. So I think that is a clear one. In which areas will depend on businesses and what the use cases are, but that's one clear general use case. And the second is in the customer service side. How do you automate or reduce the friction between what the customer is seeking to get an answer for is another active area, widely adopted, and benefits are seen. So that's the second area. And I think third, particular to lending, I should say, is basically to what Ranvir pointed out, like how do you remove or reduce friction using the digital ideas to fast track some of these decision and underwriting the risk. For example, in case of a home loan, if there is enough information available up front, pictures, whatever, right? You can do an underwriting without, let's say, doing an FI, for example, right? So some of those ideas would advance, and get mature over time. May not be the fastest growing area, but it will definitely have a lot of value. So these 3, I would think.
Superb. And a quick 5 seconds round robin and taking the cues from Mr. Karan Johar. If I have to ask all of you, one word that comes to your mind when you see the next 3 years as a positive stroke, keeping your business into mind, what is that one word that comes to your mind, Anil? Without thinking.
Transformative.
Ranvir?
I realize we are not in the Karan Johar show.
He's thinking now.
I realize we are not in the Karan Johar show, so I'll make the liberty of taking few words. See, I think the simple point, I would say the vast possibilities of AI has not been fully utilized. We are just at the turn and cusp of something much, much bigger thing to happen. Whatever we have seen is just a foretaste of few things to happen. So it has to be AI. Gen AI is one format. He has already eloquently talked about things, and I think that will truly, truly be transformative.
Superb. Nilesh?
I'm loss of words, but I think what doesn't change would be, getting the right people and getting the right customers for the business. I mean, those 2, I would just simply put as my points.
Superb. Gaurav?
Money. I think all
Money.
of us are going to make money. Everybody's realized that lending is where the money lies, and this, I think this ecosystem, this industry is there to stay. So yes, be a part of it, make money, let's all make money.
Superb. Transformation, disruption, Gen AI, people and money. You got it all. This is where I rest my case today. Thank you so much, gentlemen. Thanks for sharing your wisdom and experience. Maybe one question we'll pick it up, one or two. Anyone who has any intriguing question, thoda kam rag karna, but it's allowed today. Anyone? You want any specific person to answer? Ranvir, okay.
Okay, so first of all, it's a myth, flat out myth, that RBI intervention on APR has made difficult for fintechs to serve customers. I think if one refers to what has transpired over last 1 year, what RBI has laid out without putting any cap on APR is very clearly that there has to be a process to arrive at this number, and something which can never ever be compromised is the element of transparency and disclosure. So what you may see in the last 24 months particularly, that there has been a big push towards achieving that transparency and disclosure as far as APR is concerned. KFS, which is one manifestation of that, which is the key facts and key KFS, which is mandatory for 100% of the customers. How has it changed the market? It has changed the market in the following manner. The products have evolved in such a manner where what used to be a much, much higher APR now is operating at a lower APR. It's not so much just because RBI has put a cap, but it is also to be competitive in the market. What a lot of people don't realize, that high APR somewhere is synonymous also with, not because of the APR standalone, synonymous with the element of compliance somewhere getting compromised. So large portion of the market, I would say 90% of the market remains unaffected. People like us who were doing shorter tenure loans, which are less than 6 months, now have moved to 12, 24 months, because you can serve the customer better without getting into a zone where the APR would be higher. It also puts a method to the entire process of arriving at the APR. So that has how many people have transformed. And I think if there is any evidence to go by in the market, the evidence is rather crystal clear that the APR has not come in a way of putting a stifle to the whole growth in the fintech industry. Your second question, needless to say, is a speculative one. I don't think I would be in a position to say that what is an acceptable APR for RBI. But there are 2-3 things which have to be said. First and foremost, as I said, RBI has shown a very strong iron will in ensuring that whatever you charge has to be disclosed in a manner where the burden of communication doesn't lie, rather the burden of understanding doesn't lie with the customer, but the burden of communication lies with the fintech player. It's a great positive step. As he mentioned, the 2025 to 2035, I think if India wants to go to a developed market, you need systems and processes like this. You can't treat customers as chattels. You have to treat them in a way where they are known and things are understood to them. That's number one. Number two, I think, sometimes we tend to revolve around APR, though APR is only perhaps 10-15% of the discussion where RBI or regulator has got engaged. The remaining 80-85%, which may seem like, moves from the regulator, which may come as a hindrance in the business, but then has gone a long way in terms of driving a growth. For example, the FLDG example I was talking about. Not to belabor the point, I remember the day FLDG came, the newspaper was flooded with the view that, oh, now only 5% FLDG, the market will go down, fintech can't manage risk, etc., etc. But I think that was just the advent of an inflection point where both banks, NBFCs, and fintechs could work in a collaboration. They had capital and trust. We had customer intimacy and the code and the ability to understand customer better. So I think those kind of things have gone have created far more positive impact vis-a-vis the element of just the APR, which may seem like putting a pedal in the whole growth story. Thank you.
Super. Any other questions? I think there's one at the back.
Hello. Hi. If I may pick the brains of the panel. So apart from AI, do you see any other innovation in lending, especially for rural India or productive credit? Do you see any innovation which can be disruptive, or have you come across, or have you tested any?
See, rural India is very vast, right? Like agri to, a lot of rural India is already touched by microfinance, and SHG itself is an innovation that has, and SHG, the joint liability group driven credit itself has been a big innovation that brought a lot of people back into the credit world. But see, the innovation for that space, I think digital is the way to deliver. What we are looking at, and I think some of the other people on the panel will share the sentiment, is we are looking at ways and means of getting reliable means of alternate data. Sometimes it could be, as Gaurav pointed out, it could be land data that could be digitized and tokenized, in which we can do lending. So a lot of asset tokenization will unlock a lot of lending in the rural markets, because rural markets, there are two things. I mean, most lending is based only on two things. Either you should be able to assess cash flows and credit risk, or you should be able to assess the value of an asset. So the cash flows and cash flow assessment is a lot more easier today if they're all in the formal economy. But where you need to look at asset valuation, the tokenization of asset and the valuation of asset, the more it can be digitized, that's the innovation that will unlock even more on the rural credit side.
Certainly. I think this is the end of the show. But as friends, we are all outside there. Please do catch up, say hello to each other. And thank you so much for being such a lovely, patient audience, and hope you got some takeaways out of this. And thank you so much for sparing your knowledge and wisdom and making it very useful for all of us. Thank you.
Thank you. Thank you so much, Mr. Chandra and all our panelists. Please join in for a group photograph.